For more, let's bring in Needham's John Todaro. John, thank you very much for being here. Let's start with Bitcoin, and then maybe we can expand to other areas of crypto. But where do you stand on Bitcoin in 2022?
Yeah, I think into the next couple of quarters here into the new year, Q1 and Q2, I think the backdrop for Bitcoin and the broader crypto universe, because they're all very correlated, is still pretty strong here. You have institutions that are very under-allocated to the crypto space, and institutional involvement in crypto and Bitcoin in particular very much was the story of 2021. But I think we're really going to start to see that play out more so in 2022 and into 2023, where institutions get more comfortable with actually custodying, trading, and holding these assets. So you still are going to see a lot of capital flowing into that. Now, obviously, markets have been red a little bit here the last few weeks, and that is some concern about risk on assets. And you've also seen it was a really phenomenal year for crypto assets. So certainly some profit taking from institutions that are kind of reassessing and looking at that. But I think the backdrop still is there for at least the first half of 22.
So just to follow up on that, because as you mentioned, 2021 was supposed to be the year that saw all this institutional adoption of crypto. What makes you think that 2022 will be any different? 2023 will be any different? What are kind of the key catalysts here?
Yeah, you certainly saw an uptick in that. So, throughout the, what we see at Needham, we're working with institutional investors. The difference between 9 months ago and today is very different, with institutions getting more comfortable with these assets, putting some money to work, although it's still relatively small. A lot of it's still around the privates and crypto space. You're really starting to see that pick up, where institutions are focusing more on the crypto assets themselves. You've seen futures volume, derivatives volumes really pick up this year, where institutions are more active on that side of things. So you've certainly seen the institutional pickup, but a lot of institutions still want to get comfortable with it. This is a process that takes time. And so you're seeing that hiring today, though, whether it's spinning up dedicated research analysts, portfolio managers to look at crypto. You're seeing those initial steps taken basically through 2021. And then it seems in 2022, you could actually start to see more of that capital get put to work. So I think that 2021 was a great year historically for institutions getting involved, but I think you're just going to start to see some of that capital inflow in 22.
You make a great point, John, on the research, on the wealth management side, custody and trading. I wonder if you think the new year brings us another inflection point in payment mechanism, right, and just opportunities at point of sale to use it, and what that would do to sentiment.
Yeah, certainly. So there's almost two use cases for crypto assets. There's the actual utility, where you're using decentralized applications, whether it's DeFi applications for borrow, lending, trading, or actual payment applications, whether that's stable coins, whether that's the Bitcoin Lightning Network, where you're actually sending payments. That could be in the form of remittances or other areas. And so you're seeing progress on both those fronts. DeFi applications are seeing a growth in that. Borrow, lend, you're seeing a lot of growth in that front. And it's becoming a lot easier to use. So historically, these protocols were difficult to use for your everyday individuals. And you're seeing a lot of progress on that front, where development progress is actually coming to the point where it's very easy to use for individuals and everyday users. And you're starting to see that on the payment side as well, whether it's stable coins, whether it's the Bitcoin Lightning Network. You're seeing more and more use cases on the actual payment side. So I think that that's all set to play. Once again, that kind of feeds into the backdrop of why institutions are looking to get allocated to this space, because you do have efficiencies, whether in decentralized finance or on payments, that are coming to fruition now, that is really starting to challenge some of the legacy payment institutions out there.
Shepard Smith here. Thanks for watching CNBC on YouTube.